Greetings, market rebels. Welcome to this week's sector situation. It's Sunday, June 25th, 2023. It's just about 11:15, I think, here on the East Coast, AM, of course. I'm Wayne, my partner Ryan's working on the market outlook overview, and we covered macro measures, so we're going to cover a probably pretty brief sector situation this week. So here's our trusty disclaimer. You would have a look at that. Here's the trusty intellectual property rights notice. If you would have a look at that, excuse me, then as I've been doing, I'm going to leave the planned program for really macro measure up there in case you didn't catch that. You can try to decipher some of this stuff. But the main thing was, right, the prior week, we had a very easy scenario, relatively speaking. I think things were so overbought at the end of the prior week that it became much easier to say, hey, most likely scenario is you correct more or you at least pause and stop going up. And of course, we did get a pullback because you were just very extreme, and you just don't often see things get all that much more extreme under relatively normal conditions. And so that effectively played out. The going to DEFCON 2 was probably a good move, just being ready for that to happen, right? And then you start being more of an aggressive player inside of that little corrective activity that we saw. But at this point, it's hard because of the catalyst. I think you've got the end of quarter window dressing potentially. You've got pre-EPS runs that could happen at the start of March. A lot of that's in line with the third presidential year cycle sweet spot we talked about in macro measure for months and months and months. So all that's contained within there, but that way you have a general idea. If I refer to something and you took a snapshot of this and put it off to the side, you'll know. So anyway, let me switch us over to our grid view and take down this. I don't need to be checking this out because we just need to get started on the technical discussion. Share screen number 4, screen 4. There we are. So we should be covering the grid. I did boost a few of these just so everyone could see these a little bit better. But, you know, as we noted last week, right, a lot of this stuff had a great run, and it too was due for probably corrective activity, as I always say, or usually say, pause or a pullback. And so you got a pullback or, you know, generally a pause. So if you're wondering, well, what's the difference, even though it should be probably pretty obvious, I would say something like this would be a pause, right, where you just don't get all that much happening in discretionary. It wasn't an awful week, but it really wasn't a good week either. So that's more of a pause. And of course, probably something like this in real estate is more of a pullback. Something like this in XLI and XLB, these are more or less pulled back. And you could see that the RSI readings across the board, not every single one of these, but a lot of those did kind of work their way back from the high 60s to the lower 60s, and things that were pretty high even corrected more than that in some cases when we got into the kind of like the mid 50s. We got to the lower to mid 50s on some of these as well. So that's that. Now, I don't know exactly what happened. I do feel like they took that this Russian news development, whatever you want to call it, over the weekend, that does seem like someone caught wind of that. The way that I'm looking at it, but I don't want to go into that too much. But things like energy kind of started turning around a little bit there towards the end of the week. Just tried to have a little bit of a turnaround, and some other defensive things held in there, like we talked about, probably XLV, right, being pretty defensive, but the KRE, which I'll show, and XLF, they did not have a good week. So we'll go from there. But this is pretty much what we would expect overall, that you do get that overbought and you've been running for a while and you get some really extreme readings, that you do get kind of that XTN type pullback, something along those lines. So you got that. And now the big question becomes, well, where do you go from here? Of course, it's always the question we face each week. And I feel like it can be argued both ways, which I covered in macro measure, probably over covered in macro measure. So I would just say, check that out for why I'm feeling like this is a tough week to call. And I would just take it as it comes and do your best to manage it, right? If you see an entry opportunity that could be a further breakdown, take it. But be aware, right, that catalyst is looming, that they could try to mark stocks up in front of a holiday weekend, something that they like to do right in front of the holidays developing. And then you've got the other thing is you've got the earnings that'll be coming out. But remember, we'll be hitting into early July, and everyone knows Independence Day is the 4th. So that's what I'm referring to. You've got that tendency by the markets to rally into holidays. They tend to rally at the end of quarters, which is supposed to be like illegal window dressing, but everyone knows that it happens with regularity. Whenever possible, I think it happens. And then you've got the pre-EPS run potential that could happen where, they start to goose things up in front of great earnings expectations that will start to come out somewhere in the mid to latter part of July. So you don't get into the heart of things for a while, but they could start taking some of that optimism and putting it to work in terms of a pre-EPS runs. So in terms of highlighting something here, I think the best thing I could do is just bring up my normal basic chart, and then we'll just take a look at a critical sector, which is SMH. So this is one I think we can highlight this week that I think you can see if I put my cursor right about there, right? That's below the 20 SMA there in light blue, but somewhere kind of in that 146, about a point lower, give or take a little bit. That is probably a mini flat line is developing there. So with that being the case, you probably don't want, if you're a bull, you don't want to see this get too far below 146, because this is what could happen, right? You could have this possible gap fill. And this has been just an incredible move in semis. Some individual stocks just absolutely went bonkers to the upside with all the AI hype. And it could be real, but again, I'm one of those people that is saying, well, maybe the whole AI thing is great. Maybe it really will deliver some of these things. I just don't know if it'll deliver things as quickly as some of these people are pricing in. Maybe it will. I mean, I'm certainly not an expert on that, but right, you have to look at it this way, right? If you double 83.50, you get to what, 167, and you didn't, in other words, like you didn't get to the 167, you fell short of 167, but you almost doubled in your semiconductors in about eight months, right? Not quite, but almost doubled the price of them from extreme to extreme. So you could say, yeah, there's definitely more corrective activity. Probably, right, the next level down is going to be near that low at 143. So a little bit lower and then a couple percent lower. So you could say 1%, 3%. But if that starts to give way, right, there's the way that this formed, there's just not a lot of prior price action to say, yeah, there's really a great support waiting for this. It will have kind of worked its way into this clearance zone between the SMAs, the 20 and the 50. So this could be rough sledding if NVIDIA really comes under pressure. I don't know if some people will just rotate out of it and say, I loved it when it was a lot cheaper, but I feel like it's gotten ahead of itself in terms of the ramp job that they put together in there. And so I'm going to take my money off the table at this level, at this valuation, probably right, the poster child for the run, right, 108 up to 440. So in 8 months. So should it give more back? Of course you could say, yeah, it should. Are there problems with like negative RSI divergence up versus these highs up? Yes, there is. If it cracks to 20, is it in trouble? Maybe, or I think that low there at about 373-ish is a big deal. Probably the lowest low you could cling to would be that 366. But yeah, there's a big gap clearly, and that matters. And the reason I would say that, and I'm highlighting that, is because we had AMD, and Ryan and I try to formulate on our own to a degree and discuss things to really try to find, a really good pick for the week for the focal stock. We do have usually 3 other names that are part of that group, because you just don't know what news could come out and, alter the immediate and short-term trajectory of a stock's price. You could get, an upgrade that keeps this buoyant or something, but it didn't happen. We went with AMD, even though we used it 2 weeks ago in Rebel Pit Pro, but it was a good selection. And this is the reason I'm bringing it up, is because we thought it had this potential to crack below the 20 SMA there in light blue. And if it did, and the market did go risk off, like it seemed like it should, right, kind of like take some profits at the very least, which did seem to happen last week, this would have a chance of closing the gap. So if you can get in near the 120 whatever level and think, wow, this thing could drop all the way to 109-ish. That's a good opportunity, we thought. And of course, you could have, after the drop it had from the high, it could have also had a bounce back the other way that could have been at least fairly strong, right? $5 or $6. So we looked at it as win-win, and the volatility was there. It was a single dollar, dollar strikes, not very wide. But that's what I'm getting at, right? After the moves we've seen, if some other things start to crack, right, that's where you could get this big what am I trying to say? Downside move. Yeah, downside move. You could get a bigger downside move. But again, I think the monkey wrenches are these catalysts that I've mentioned in both of these videos. So it's unfortunately, right, sometimes it's easier than others, and this is not an easy time. And we don't even know how the over the weekend news is going to factor in. If it's sort of like the whole situation sort of fizzled out, it's not all that bad. We just don't know. But by the time Monday morning rolls around, I guess we will. But yeah, you've got that slide in most things, and I don't want to go into, I don't think there's anything here. I do think this is that's sort of like, hey, this is a no-brainer, but let's just focus on a lot of the normal aspects that we do. And one of those is, what about energy, right? So energy to me just still does not look very good. It's not acting well. There's kind of a bigger view on that in XLE. XLRE I've been concerned about, and that's starting to roll over and had trouble really trailing the market up higher, right? So to me, like, that is not a really good sign, and this defensive sector kind of catching a bid. Your financials got rocked as well, right? So financials kind of took it on the chin, and I will talk about KRE, but you did have a great run in your transports, but they started rolling over. So I'm looking at this and saying, energy not that great, financials not that great, XTN probably the better chart right now, but did have a great run, but did correct. We'll see. But to me, this is not showing that great, hey, everything's really starting to hum, right? Like your financial system's humming. There's great energy demand. Transports are rocking and rolling, like really starting to show that they're back on the move because the economy is really picking up. I kind of felt like a lot of this prior couple of weeks in some of these sectors where they kind of goosed things suddenly, felt like it was panic buying, and it really wasn't this across the board. Things are really getting better. Like it just became like, oh no, like let's pile into these things because they're cheap. It just didn't have a real legit feel to me in terms of long term. I'm in this for the long haul type of a thing. Again, it's kind of hard to prove that. It's more of a gut feel thing from just charting for so long, but that was just my sense. And so we'll have to see what happens this week. But let's go into XL. We'll do XLRE, and because that one did really come off. So this started coming off. Let me take a look at HYG. I'm sorry, IYR, which is something we chart a lot, right? So here's IYR, and this started sliding as well, as you'd expect. And we have an idea on, or at least we didn't have an idea on until maybe this week or last week. There was a bearish idea in there, and that struggled. You can see. So I think real estate is still a concerning area. And then kind of related to that would be the financials are not anything special at the moment. And there's your KRE. So that started looking rough again, right? You're below all your SMAs now. And so you're going to possibly work your way down. 39-ish seems to be a level in that thing. Again, this is not a big mover, but this is what we chart. You probably have something at 37. There's probably even a little bit of flat line or kind of hesitation to other, like a little bit above there, maybe 37.70, ballparking it, but not a good look overall with your short-term SMAs rolling over, right? Your 10, your 15 in red, and your 20 in blue. light blue, and the other long terms still rolling lower too. Right, overall, they're just down sloping. So I still think there's a possible situation brewing there, a concerning situation, even though there's a lot of denial about that. So yeah, the semis look vulnerable in the sense that they ran so far and they have gaps and it became very extreme. So remember, that's an important area. This banking thing could cause trouble for the market. That's an important area. And then some other things that might be related to some of the things we're discussing would be XHB. They're feasting in this thing because they're apparently people just aren't satiated, and there's people, I guess, panicking just to get into things. There's just not enough supply out there, supposedly, and people just want to get themselves into a home, even though prices have screamed up for years at this point, and they've also got extremely high rates relative to just a few years ago. But to me, again, I'm not fighting against this. I don't have any position on. I'm just waiting because I feel like I don't see how this sustains itself if we do have the recessionary kind of performance out of the economy in the near future, which I can't rule out yet. And how with that happening and the prices people are paying and then the rates they're financing at, how that all ends in this really pretty fashion. So, but I'm not fighting against it. You could say, well, hey, it's on the 10. What if it cracks there? Yeah, if it cracks that 10 in white, we could maybe get a little bit more. But I want to see more UOA. I think we've had a little bit of UOA in here, and I'm willing to wait and just see what happens with more, but not something. After you go risk off in the market, I think it's been kind of resilient. You'll be fighting against an area that's been strong. But again, if you go really risk off, yeah, there's a lot of jam job in there that you could give some back. You could come back to an area like this where these highs right in there at 73, that could be an area because there's your high before that, right? There's the former high right near there. That could be a pullback area for a short-term trade. Just thought I would mention that one. We talked about these as well, the HYG and the LQD. So here's your high yield, not doing much, right? And then your LQD, we've been hitting those mostly every week over the course of time, not doing much. So again, still nothing to report there. There were a few hits here and there on HYG, but not a lot of big time stuff's happening there. The KRE we talked about, which is concerning. We talked about SMH. XAU, let's talk about that one because this tends to be this to me, right, is just so indicative of how this tends to trade, where there's all these big prognostications, everybody gets excited, and then that just gets priced in quickly. Everybody wants to get involved, and then it just fizzles out. There's so many fizzles in the history of gold and silver stocks. So now you're below your 200. You can see that in the purple, and you're down. Your short-term SMAs are down sloping. So I'm happy about this, even though I'm long, physical, and I'm also long physical another way. So I'm actually happy because I'd rather buy more. I didn't want the price to get away from me. I kind of split the difference and bought some while a long time ago. I think it was probably like last summer at some point. But I didn't want to liquidate, even though I thought at points it was a little bit overdone. Technically you could see that. I just wanted to hold on. It's more of a defensive hedging thing for me, but I just want to hedge a little bit more. I'm hoping there's more downside here, but right now it just doesn't look that great after kind of a double top, and then you roll over big. You have this little kind of weak rally attempt from there, and now you're taking out those lows. So the next area down there would be these lows. There's a gap all the way down here. So I'm hoping, right, that this thing continues to get hit, but it's hard to like that, right? Like just overall, there's not a lot of good technical stuff happening there. The only thing would be this geopol or domestic developments that could suddenly reverse it. But if it's kind of newsless for a while and the world's sort of vanilla for a while, I don't think this is ready to go quite yet. We need to see it at least get back above the 20 there in light blue to start showing something to us that, hey, maybe it wants to rally. So I would kind of keep that 20 SMA there. in mind if you're thinking about anything in there. Otherwise, I'm just going to hopefully let it just trend lower and be happy about that. We have noted XBI this year, so let me get into that one a little bit, see where that is. And that's coming into the 50 there in gold. So I think we had noted that maybe, right, if this line got cracked or whatnot, it would maybe drop down to there. So now your next areas, if it doesn't hold the 50, would be the 100, 150, 200 confluence area down near, let's call it 83, ballparking it. So again, a lot of these aren't big movers. We're just doing this to get an idea on where things are, where sectors are, how things are behaving. So after the run, which I think was a very nice run. Yeah, I mean, you can see this is correcting. Remember, this is more of a this can really be like a speculative thing that gets its bids and runs like it did, and then it can really get whacked, as you can see, like from prior price history. So probably need to just cover some of the commodities. So let's take a look. There was a little bit, I think, of an oil bid on Friday that it came in late in terms of that sector in XLE, where we kind of reversed a little bit. But overall, right, this is where we are. So let's see if is it giving that to me? Yep. So maybe that, I don't know, maybe the international news does something, but otherwise, all your SMA is pretty much downsloping, right? So again, I won't be excited about being a bull in there until I see it show me something, right? I'm not saying it can't. It just, I don't think there's anything great happening there technically. And we've been saying that for a while, and it's turned out to be the case, right? Where there just wasn't a lot of great opportunities to trade in there. Every sector has its moments, and this thing sure will have its moments again, but it's just nothing great's happening in there, right? In this future. So we got to call it like we see it. And I'd love for that to start rocking and rolling, but it just isn't. So sometimes we get some great moves in there in UOA, and but it's just been dormant. And then here's copper, and we said it was doing a little bit better, and we'll take it. It did try to hang in there, but again, look how it finished the week. Now, is it okay that it held on to above that light blue 20 and that's the last of them? Yeah, it is for now, but excuse me, kind of cracked below trend, this little short-term trend, and now, right, if it cracks below there, it's maybe coming back off towards lows. So again, is that showing us that the world economy, global economy, is really roaring? Again, I just continue to look for things like IWM. Is it working? Are these other things like financials working? A lot of these things just aren't working, and to me, like, it's just the bull market is like relatively concentrated, and it's also so it's concentrated in just a few areas. I'm not saying it doesn't have any breadth to it at all. I'm just saying that so far I'm not that impressed by it, and that's one reason why I'm still willing to kind of give the bears some more rope to work with, because I just don't see this great situation unfolding in a lot of the key areas, just the way it is. Even like, because we can't go with the lumber future anymore, we have to use these ETFs. But even despite that, XHB and all that, like, look at lumber. Here's how lumber ETFs traded last week. Cut. I mean, that was a rough week right there. Wood is another one, and it also had a rough week, right? It's back towards the lows. So this is why we check on these things, like these commodities and stuff like that. You put that in with IWM, which wasn't nearly as impressive as, of course, the Qs, which were the standout leader, with the SMH being the leader within the leader. And they backed off. They're not far. If they drop below the golden 50 right there, 178, they have a problem, because they have a gap they could fill. So I just don't think you could be that impressed by small caps, by financials, by transports, by energy. The regional banks are looking a little concerning again. I would not hesitate, if we saw more paper in there, to start putting more bearish KRE ideas in there, with the way that that's rolled over. Here's your financials right there, very close to losing the 50, which would be the last of them in gold. So and that maybe brings about a trip down towards those recent lows or those lower levels. Now, these are not big movers, but I'm just, again, using these to get kind of a picture of the market as a composite and what's really good, what's really happening, right? And it just, that sort of like, we're really about to start picking up as an economy, which we could still. It's just that I don't see it yet. And right, if the argument is that the market stiffs things out, does such a great job of stiffing things out 6-9 months ahead of time. Well, if our economy is about to start improving, then why are the small caps not improving? Why are the financials still struggling to get out of their own way? Why are these commodities not bid more? I don't know. I mean, to me, it just suggests, why are transports really not roaring? It just doesn't add up to a picture that things are all that great, which is what I'm going to stick with until that changes, or I read something that really is like, oh no, well, that definitely is a big turnaround, and maybe we kind of had just a slow period, and now we're finally getting back to a good situation. But I just find that, again, hard to believe, because rates being where they are, inflation being where they are, where it is, and those two in combination are, I think, hurting consumers. And I think with the tech layoffs, that stuff's starting to hit. AI could produce, according to all these so-called experts, more layoffs. So might help company bottom lines, and they could get, again, the stock market won't necessarily track the economy. We know that. So you might get a couple quarters, this, that, maybe even longer for all I know. But ultimately, a lot of people being replaced by AI and losing a lot of jobs and income helps company bottom line, but does it really help the overall economy? Does it help the country when so many people would be scrambling to come back to anywhere near that level of income? So we'll see. It's very interesting times, but that just does not look good right there. I'm trying to think if there's anything else I can cover. The dollar, I'll cover the dollar and all that, but it's just not, there's nothing great to report there. This is not an easy week to say, yeah, this, that, the other thing. There's your dollar, right? Kind of, could it do something? Yeah, maybe. Did it do something on Friday? Maybe, because there was some news chatter out there among the well-informed that something could be brewing in Russia, maybe. But the VIX, we did see one VXX call by that was significant this week, so that's maybe worth noting that someone's nibbling, but there hasn't been a real rush there. Here's the VIX, right? We just said this, that if they did what they did here in this sleeper scenario, getting this market goosed up right in front of earnings, this stuff's cheap. So if you wanted to start buying smart months and maybe being prepared to sell high earnings vol, you could bring those kind of questions into the Phoenix portfolio, which I think is probably a service that we should be talking about more, and letting people know what is covered in there. And the fact that you can go in there and ask questions that it's really unlike the basic momentum or premium collection. It's a totally different thing. And I think it's very informative. I think Ryan does a really great job in there. You just need to ask questions and you'll get answers. And that's pretty tough to beat. But what can you say about that? And then of course, TNX, we do chart as well, but there's really nothing cooking in terms of all these where there's, hey, this is standout stuff. Let's highlight this, where we got way up there and our RSI's rolling over and now we're losing support. And hey, we could see corrective activity. Maybe this yield will drop. No, there's not a lot happening, right there. You've got a lot of SMA support right beneath where you are. It's kind of like this listless sort of behavior as of now. I would think this starts to change a little bit when we get closer to maybe the July meeting or something like that. But for now, nothing's happening, that's anything extraordinary. So I think that is probably a wrap on things. I don't want to belabor it. I just don't see a lot of great, the summary would just be, I don't see anything great happening economically. I think the commodities, the IWM, the sectors we discussed just aren't flashing anything great yet. I think the KRE took a turn for the concerning right now. I think SMH, if somehow, and I don't know if it will, but if somehow a risk off scenario develops, these things have ran so much, and there's gap closure potential with NVIDIA, which is the big dog, right? So I would say that could really be something, an area to keep your eyes on. I think it's always a good area potentially to trade, but the problem is that if you look at these charts, there's, to me, the apples of the world, Meta, Amazon, some of the other ones, like they're just not, they could be in trouble with a couple of bad days to start the week. But again, maybe the Russian stuff brings that about. But a lot of these big names, they're making either new all-time highs, recovery highs since the October lows. These are important companies in terms of their market cap and what they represent. And there's Amazon even making a new, I think, recovery high. So a lot of these are not at this moment ready to start rolling over. Now, again, if that news does deliver that rollover, fine. But I'm not fighting against them yet. I can't say that if we said this Russian news is nothing and we kind of, I still think they could continue to rally this stuff longer, again, with the catalyst they've got. So just keep that in mind as a balance on things. But there's other sectors we discussed, KRE and SMH. If risk off does occur for whatever reason, keep those in mind, because one is weak and it looks like it's potentially ready to go back and test some lows. The other one just got so far out of control that giving back more wouldn't be out of the question. So I hope something that I've shared with you helps you out this week or some week in the future. I want to thank everyone for tuning in, and be nimble out there this week. I think that's the best advice, because there's a lot of stuff that could affect the market, and you want to be ready and just stick with your discipline in times like this until it gets easier again. Take care, everyone.